Hello, thanks for taking the time to listen to this blog podcast. So, what did or how did the 2008 financial crisis affect you? For most consumer retail investors, I'm not really sure if they fully understand the implications of that moment in time in our history. But, for me, having worked in the financial industry for 20 plus years, it certainly was a wake up call. And while I didn't go out and do something as dramatic, for example, as creating Bitcoin, I did design RSP portfolio model, which is complemented by a recommendation to create a tax efficient securities lending strategy. Now, if you want to know more about that, feel free to ask your certified financial planner or your chartered professional accountant, but don't be surprised if they've never heard about it before. The idea was to create a risk-adjusted RSP and tax-efficient portfolio based on know your client information, as well as an individual's debt service, net worth, and a bunch of other things as well. It's a different way to build an RSP portfolio that would need a certified financial planner, chartered financial analyst, and chartered professional accountant working in cooperation and harmony together, with stronger fiduciary responsibilities and stronger financial analysis. The portfolio model I designed works. And so that's an exciting thing, don't you think? I mean, here's a guy basically with a grade 12 education and going to the school of hard knocks with some creativity that builds something that could actually help average Canadians. I mean, we in here in Canada have the ability to build a portfolio and, according to my data, add value to those who use it in their financial plans. And that's exciting. And yet, we are not. Now, that may be because Security does not fully exist yet. I mean, I'm not even incorporated yet, and the reason for that is because I don't have all my ducks lined up yet. Security is still at an infancy stage, building relationships within the financial industry and establishing more and more trust, but we're now at a point where we want to take it to the next level. The mutual fund data that we are using isn't good enough to go much further. While I've been able to use what I can find on the internet to show its performance over the last 9 years, this isn't good enough for a financial risk manager to present to chartered professional accountants or certified financial planners. And this is the reason why they may not have heard about this yet. And this, though, is where you come in. You see, I'd like to appeal to you, whoever you are, for a teeny tiny little bit of help. But first, let me explain. The goal of Security is to get us to think about or around how our consumer retail investor is using leverage and where and who actually benefits from its use. But it is also concerned around how this borrowing is currently impacting both our social structures and now, our economics as well as our climate, right? Our recent economic economic model was based on a lot of average consumer retail investors buying and consuming goods and services. It involved a large amount of us use leverage to build and buy a lot of housing, for example. But it also included a lot of us to buy our own car, and for many of us, buying a lot of personal stuff and then, throwing it all out into our landfills. Unfortunately, we're also now doing this with a lot of leverage, and this is where the challenge is now coming in. In a recent article by the Bank of Canada, and you can see the link in this YouTube description, we are now entering the age of leverage. But as the bank identifies, it is also now stifling or challenging us on our GDP growth. And don't get me wrong, though, using leverage to build a house is fine. Leverage to buy a car is also fine. However, if our incomes, economics, and basically our planet is now saying that the pathways on how we are achieving this isn't working, well, maybe we need to find new pathways and rethink things as well. My belief is that it starts with the purpose of why we borrow money and who is the benefactor, and is it to improve efficiency and productivity for the consumer retail investor who is partaking and therefore benefiting from its implementation. I think the way of the future is one which is going to be a whole lot different. And so, the way we or you use leverage is also going to need to change. While my purpose initially, when I left the bank 9 years ago, was to introduce what I call investment leverage, it's certainly more than that today. Climate change, minimalism, subscription, circular economics, retirement income crisis, higher interest rates, affordable housing, inclusive economics, Bitcoin, artificial intelligence. and a host of other things are all at the forefront of our economy and represent revolutions at all levels. And so I believe Security is here to help figure some of this out and is part of that revolution. For Security, it starts with reducing the risk that all this leveraging to consume has had on our consumer retail investors' balance sheet. Security's goal is to suggest investment leverage solutions that are suitable, but also improve productivity of leverage to build wealth for you, the consumer retail investor. Security's lending strategy, the one I designed, may be just one solution, but there are so many more, such as gigs, solar, home sharing, rental, cash damming. And so here's what I'm going to ask you to do finally. And I'm going to ask you to do this for yourself, but also for our children and for us as Canadians. Can you just go and ask your bank more about what I'm talking about? And also ask 2 friends to just simply listen to this blog podcast as well. That's it. Nothing more. And if you do that for us, thank you. You see, we have to want to change. So do us all a favor and ask the bank the question. Thank you in advance for considering this request. And please, let's keep the conversation going. All the best, Will Prinzen, founder, Security.